This week was a not really, in a sense, that much opportunity that I saw personally, but there was still opportunity in the market nevertheless. We have to really be mindful and see what price action is giving us so then we could capitalize on these moves because there's not going to always be so many opportunities every week. So whenever we do get these, we got to maximize on it. So therefore, I want to emphasize on finding your direction in the market. So whenever we're looking at our direction, we need to build the story on what price is doing. So if we're building a story, looking from the left, we know that we induce sellers all the way back here. So from this high to this low, we induce sellers. We had this pause here. This pause right here. So that pause right there lets you know that, okay, there's a buildup in the market now. That buildup then takes out the low, which induces sellers, letting you know, okay, sellers have been induced in the market. Now we can possibly trade the other way. That becomes your inducement high. We take that inducement high. So since we take that inducement high, we induce buyers into the market. Now, once these highs and lows are taken, I see a lot of people in the community go straight for wanting to take a sell or a buy in the other direction once these higher time frame highs or lows are taken, and that's just not how you want to go about it. Whenever you see a high or a low from the left taken, chances are you need to be waiting for more price action to develop. So you see how we got this push up, then price induces sellers by taking out the lows. You have to ask yourself, what causes that move up from that low to that high? Buyers were induced. And if I zoom in a little bit, you can see it more clear. Just grab what price reacts off of. So if you look at it closely, you can say, okay, why did I grab out this low? Notice how we had that pause after we react to that inducement low. React there. Then we have that build up. And then we trickle down, inducing sellers. So whenever sellers are induced, we know we don't want to be selling anymore until sellers are trapped. So now we have to frame out where sellers are being induced from. This high to this low. Sellers are being induced. That's your inducement high there. Now that we know that we induce sellers from this high to this low, we know that we want to target that area. That area gets taken out, and then we trade lower, taking out inducement low. Why is this my inducement low? This is my inducement low because from this low, we have this build-up area. Let me go on a lower time frame so you can see it clear. Why is the inducement low? One, it's also the last low before my LB1. Two, notice how you see how we had this reaction from this high. We then have that BOS, and ever since we had that BOS, price has been respecting that area, basically creating structure, a staircase, whatever you want to call it. So after buyers have been induced, we know that we want to see inducement low taken, because whenever inducement low is taken, sellers will be induced into the market, and essentially buyers will be trapped, because this is early buyers getting into the market. So sellers induced, boom, take it out, liquidity block respected. Now, since we know sellers have been induced by taking out early buyers, which is our inducement low, we know that we want to be buying. Also, why do we want to be buying? Because we had the same scenario on the higher time frame scale. So always remember, like, don't get too zoomed in. Just because we had this move up, inducing buyers, most people are going to be like, okay, we can potentially sell to the lows now. But that's not the case, just because of the fact that we have price telling us a story from the left. We induce sellers on a bigger scale. So also have to factor in this as well. Whenever you see like impulsive price action like this, price has to engineer liquidity into the market because there really isn't any internal to go off of. So you'll see price start to respect imbalances or just anything off of this area, and it'll induce sellers into the market so we can engineer that liquidity. You see how like we induce sellers here, and then we start moving up. So sellers want to be selling this whole structural area. So that's how you just frame out what you're seeing on a on a liquidity standpoint. So we induce sellers off the back of that area. Remember that area. We do it again on a lower time frame. We move up. We react to this area that sellers want to be selling from, because why? Had that BOS in the market. Sellers want to be selling from that area. We got that build up. Okay. Price action we went over on the last webinar anyway. So we ended up inducing buyers by taking out the structural point. So therefore, we need to see some, more price action form. So I'm not going to be selling whenever this high gets taken, just because, we've trapped sellers and we could potentially see a move to the downside. Yes. But at the same time, whenever you get a little bit more experienced in the system, you'll notice things. You'll start to pick up. I'm not gonna say we look at the market. We look at the market in the lens of a pattern, but pattern recognition is key as spotting, these things that reoccur, because at the end of the day, we use steps to frame out our system. So since we see sellers trapped, we know that we want to see a move occur to the opposite side of the market, possibly taking out internal. Since we took out external, now we take out internal. So, this is my inducement low. Why is that my inducement low? Okay, so you notice how we have this push up after the move down. Very intricate, but at the same time, it's our inducement low, because we had that reaction as well. And also remember, from that low to this high, buyers were induced. We react off of this trap, and we also induce buyers from it. Damn, I can't use this brush tool at all. It's terrible. Okay, so we react off that area, inducing buyers, creating more liquidity at this area. Then we sell off. Oh, look at that. We didn't even take it. Perfect. Inducing more buyers after taking out this low. Inducing more traders to get into these longs. And then they get trapped. Boom. So then, once the low gets taken, okay, what do you want to see? We need to start building our bias again. Remember, we induce sellers into the market. We do not want to be selling this price action from this high to this low. We do not want to be selling this. Why? We induce sellers. And what do we keep doing, right? Notice the pattern. If you look to the left, price action is telling you the story. We keep inducing sellers. So if we're inducing sellers continuously, that means that we could potentially keep going up, because we have to induce lower to go higher. So in that case, after sellers are induced, we have our inducement high. Why is it our inducement high? Let's tell you. From high to low, we induce sellers. Therefore, sellers want to be selling that. Why? POI, basic SMC concepts. So, whenever we induce sellers in that form, after we have this reaction, what do we also have? LB to the downside. So now that you know that we have LB to the downside, we know that we could return back to this area. So now that we know that we could return back to this area, we want to frame it out. We need to see some sort of liquidity being printed above a liquidity block to support the entry. Okay, so also let's frame this out. The fact that we had this inducement high taken after price respected it, moved away, inducing sellers off the back of that area. I can tell you now there is no viable entry above like in this area because I was just stalking it already in that price action. But the premise of this webinar is to help you train your eye on a essentially higher time frame so you can not get lost in the sauce whenever you see things a little bit more intricate on lower time frames that may confuse you. You might say, oh, why not this high, why not this low, whatever the case may be. So just helping you build your bias, helping you frame out your higher time frame by looking at price as a whole. Therefore, we have taken out this high, inducing buyers, yes. And then I want you to see, what have we reacted off of? We've reacted off of this area to cause that push up in the market. So this candle here that also induced early buyers into the market, as you can see, intricate but BOS. We come up, we return back to that area. Yes, it was a LB, but at the same time we had that BOS, so I don't want to be trading from that area. So we come, respect it, move away. And then we also start to build more liquidity at this area by respecting these lows, We also induce buyers from that area. Look how I'm able to just easily frame this out on a higher time frame scale, because at the end of the day, like, it applies to every time frame. A lot of the new members will ask, us what time frame is the best to use or whatever the case may be, and it's not that. You have to use logic for the system, and our time frames are used to build that story. Essentially, there's no one perfect time frame. You use all your time frames in conjunction to build that story. So at the end of the day, whenever you're trying to build your bias, you have to start asking yourself these questions like, who's being induced into the market right now? Where's the liquidity at? It's not just a thing of, oh, I need to go to the 30-minute or I need to go to the 1 hour to look to see where, my liquidity points are. It's not just about marking your liquidity points. Look at what price is doing into the market. What is it telling you? Remember, like I said, we keep inducing sellers. So if we keep inducing lower, essentially we're going to start trading higher. Why? Because we trade with liquidity. We don't trade against it. So we then take out our inducement from the left. Why is that our inducement from the left? Because this price action is inducing traders to go higher. Notice how after we return back into that area, we're still inducing buyers into the market. So buyers want to be buying this thing, they get trapped, and then boom. So that's my inducement from the left, because it's inducing price action to go higher. Early buyers get trapped. That's a potential higher time frame entry there. This is a viable target here. Why? Okay, so notice how we had this push up in the market. We had that push up. inducing buyers. And notice how we react off this area right here. So this low creates that buildup. So since this low creates that buildup, pay attention now, we have this price action that respects this high. So basically that's another thing of, and then you just frame that out. So notice how from this high, let me get the brush tool again, from this high we sell off, boom, to that low. We ended up inducing sellers. So we just drag that out. Notice how we also respected that area whenever we whenever we took out inducement high, we respected this area to then induce sellers into the market. What does that do? Whenever we respect an area and then induce the other way, we engineer liquidity into the market. So therefore, engineer liquidity target. So there was also a lower time frame entry I want to show you guys. I ended up missing this just because I just was not awake at the time. Unfortunately, but in any case, you know, these are to train the eyes. So I can already see the entry right now. Same thing we go over all the time. Notice how we're still trading in this area of this trap, right? So since we're still trading in that, notice how we have this build-up price action. We have that aggressive sell-off into the entry point, into that liquidity block to the left. So we have this inducement high. Why is it the inducement high? Like I keep saying, high, low, sorry. We respect that area. We respect it and move away. You guys know that's what we like to see because it's honestly the highest probable scenario for looking for our confirmation entries. We sweep these lows. Necessarily, I'm not going to say you can't take this entry here, but me personally, I probably wouldn't have been looking for it, but we can still frame that out as a potential entry because it is valid. I'm not going to sit here and tell you it's not, because in any scenario, I have taken trades like that, a little bit more aggressive in the case of the liquidity block doesn't look as clear, but at the same time, this whole low is a LB. The whole low is a LB. Why? Because we've taken liquidity from the left. So at the same time, you may say it's hard to spot those type of entries, but you have to remember the logic behind it. It's not just a liquidity block that needs to be clean or whatever the case may be. It just needs to support our system, like we take that, so that low is essentially LB. You know how we respect that inducement high. Notice how we create that inducement low below by pushing up, and then we take it, trade up. That's basically what you want to see. So that's basically what we get here. Now we have that slight pause in the market, respecting this area, and then we also create our inducement low here, which also gets taken. Inducement low, why? From this low, after respecting sellers trying to get in that market, low, high, induce buyers, trap. Frame it out. Notice how we get that pause reaction, and we have what below? Liquidity block. Why is it our liquidity block? We've taken internal here. Look at how we just taken internal here. So we've taken liquidity from the left, inducing sellers off the back of this reaction here. So once we get that sell off, we induce sellers and we create our LB. Notice how we also create the inducement high above it. We induce buyers, early buyers. We respect basically this whole area by right here. We induce buyers. Oh, that's not the line tool. Induce buyers. Buyers are still trying to get in this thing above the inducement high. We do not want to be buying above inducement high. I mean above inducement low, I'm sorry. So buyers are getting trapped. Inducement low below. Liquidity block below. This was more of a basically a double confirmation entry. Can take it to these engineered liquidity highs as well. If you're trading on futures, you definitely wouldn't have been able to take this target just because of the fact that price took a few days to get to there. But in any case, on futures, my targets would have been this high. Why? Because if you go on, let me show you on 15, it looks cleaner. Let me start deleting these because this is getting messy. This is getting messy, man. Okay, actually it's cleaner on the 1 hour. So notice how we have high after reacting from this area that buyers are being induced from, low. What can I frame that out as? My inducement high. It's all the same shit. And remember, we react from that area, and what do? We induce sellers. And that does what? Engineers liquidity for us. So, okay, and let's go back. All right, so in hindsight, it looks fabulous, but at the same time, we're still making sense of it. So we're reacting off of this area. We induce sellers from here. Take out this high. Take out this high too from the left as well. So that gets taken out, buyers get induced. We trade lower, taking out lows. Nothing really to frame out. We take out this like internal low. Nothing I would be too happy about. But at the same time, we just have to remember we're still below this low. Below this high. So we can still see bullish price action form. This whole low is what? An LB still, just because of us inducing sellers. Yes, we taken out this high from the left. Yes, we did that. But just remember, we can still trade above this inducement high. So therefore, we've taken out an internal point, and look at what we did before we taken out the internal point. It's very key to remember. We have that build up before. So we had that reaction off the back of it. Take it. And then we trade higher, inducing buyers. And then what did we also are reacting off of? This area. That's causing us to trade lower, taking out this internal point. So we take out that internal point. We form our new LB. Me personally, when this internal is taken, I wouldn't take the entry off the back of this LB here. I don't know. It just seems too much for me to be taking the entry all in the same area. I wouldn't take it. So we form that new LB, and then we have that build up of price action afterward. So our inducement high we have here, we have that pause in the market. Notice how we have that pause. Let me scoot this over. From that high to that low, we induce sellers. We have that pause here. Notice how one candle, two candle induces lower, takes out that low, and then we come higher. So then from that low is where we induced buyers from. Why? Because we created a new low after taking out this one. So since we created a new low, from here to here is where buyers got induced from. Early buyers, essentially. We come and we react off of that area, respecting that low, and we do what? We move away. And then we take out inducement high from the left. So we take out that high. So now we know this is a liquidity point that we could potentially return to because buyers have been induced and respected. Just frame that out, move it away. Move it into the future, and price takes it. What does that give us? An entry point. Why? Because we have induced sellers after we've induced buyers after taking out inducement high. So what did we do here? Let's go over it. Taking out this low after taking out after trapping sellers. So we have that BOS to the downside. We respect this area. We respect this high. And then we trade lower, trade higher, whatever. Just simple price action. Have this area of liquidity, trend line, whatever the case may be. That's not really that important to me. But then what is important to me is that we induce sellers after respecting this trap. So high, low, sellers got induced. And what does that leave us? Early buyers were also trapped because from this low to that high, buyers were induced. Therefore, inducement low, liquidity block below, there is your entry. And the times, I can't lie, the times that these came were just very shit. Because most of these did not even happen like New York in the morning. So we have one entry that's New York in the morning, actually. One in London. One in Frankfurt. So these entries are all over the place. I can't even lie to you. Stop loss is pretty big, but who cares? At the end of the day, this is following the system. And we have a higher time frame target being the engineered liquidity high to the left. Frame it out. Target those highs. So yes, we get price action that comes up, induces higher by taking this out. So since we induced higher, we know that our low can potentially be taken. It's normal. We have this buildup of price action in that, building liquidity, which is fine. This could cause a lot of people to be emotional in this trade, but you just have to stay true to the plan. Like if it loses, it loses. Who cares? It just all depends on how much you're risking. Therefore, you'll be able to go, through with the trade and not have to deal with the anxiety of having too much size on. Plus, you're probably already risk-free from these 3 trades already after taking out this intraday target. So we've induced buyers off the back of that trap low. More buyers are trying to get into this. Buyers get trapped. So now, what do we have below still? That liquidity block still gets respected. I do not want to take an entry once this low is taken. No, because one, I'm already in. So there's no point to try to take it lower because at the end of the day, this could lose. This trade could lose. So at the same time, there's no point to put, more risk on the same trade just because you have a feeling that it can go higher. So just wait for more price action to form. What do we have here? We're still trading in that liquidity block. We have our inducement high that takes out the low that we have printed from the left here. So what we also have here is, if you look, we trade higher, inducing buyers. Therefore, buyers are trying to buy this thing. Notice how we get that pause. We trade higher, price comes back into it, trades higher again. And then there's your inducement low. Potential entry again. Can't lie, this is very hard to spot in live price action. Very hard to spot, a very hard entry to spot. I can't lie to you. I definitely wasn't a part of this because also this is Asia. But at the same time, valid for the system. Can target partial this at this high, target that engineered liquidity high. We can use this as our LB because we've taken this low to the left, and we also have this LB to the left as well. But in any case, if you want to be more conservative, which is the smart play, is to put your stop below this low. You still get a great RR, and you have the safety of that liquidity block still being respected, because at the end of the day, price could have easily traded below this low and then flew. So me personally, stops would be way safer below this liquidity block to the left, and then just target the engineered liquidity in the market. Then we have Friday's price action. After we take out this high from the left, we then have this build up. So just frame it out. Price respect in this area. Price trades below it. Notice what we did as well. We tapped into this area and we've induced higher. Now buyers are trapped. We formed that new LB into the market, and we've also induced sellers, so we don't want to be selling from this high. So currently we have this here. Price respects this, and from look at how we have this pause, reaction, move down. This low is the move up that causes price to take out the inducement high. So just frame it out, move it to the left. We have LB below, another potential entry. And I was kind of gutted because I came to the computer and I was waiting for this because I was taking a shower. Price was like at this point, and then as soon as I came back, I freshened up. I just tried to forecast a little bit. Price is already like gone, so I'm like, yo, I'm sick. So in any case, inducement low, entry, liquidity block below. Still targeting that higher time frame target. And smashed. And then we just get that aggressive sell-off after liquidity's taken. So gold, I can't lie, I did say at the beginning of the webinar there weren't really any opportunities on gold like that, and there was actually. So it sucks, sometimes we can't catch them all. We're not always as sharp during sessions to spot these things, but it's great to go over every end of day, every end of session, every end of the week, see what you missed, because whenever you start to frame out your missed trades like this, it just trains the eye to help you improve on what you could have saw like versus what you did see. So what I like to do is, when I give you guys my end of day markups, I've been doing end of day markups for as long as I've been trading, at least since year two for me. So what helps me is frame out my forecasts. So I frame out my forecast, before the session, and I compare that to my end of day markups. So basically a before and a after. So whenever you have that concept of seeing, okay, up before, this is what you were doing, right? This is what you were looking at. And you were looking at that from a bias standpoint, because you have to understand, like, whenever you're framing out your bias or your forecast, you're looking at it from a biased standpoint. You're not looking at it from a neutral standpoint, because remember, we have our we have our emotions in the market. Don't let anybody tell you that your emotions are not in the market, because at the same time, we're putting money on the table. So it just doesn't make sense for somebody to say you can be numb to this. You're always going to have some sort of emotion when it comes to it, and your bias plays into it, because if I want to see price go long, sometimes you're going to look at price and say, oh, we've taken a low, I want to see it go long. But you're probably not factoring in the higher time frame. Like I said in the beginning of the webinar, look to the left. These things are very important. So we have to also look at the opposition, right? Like, why can this trade like fail, or just dissect like the probability of this trade. You really need to get more, what is the word I would say, for lack of a better word, I'd say there comes a time where once you watch the content, once you back tested, you got a good grip of the strategy. There's time for self-refinement. Only you know what you need to work on. So yeah, ask questions. We're always here to answer the questions, but at the same time, like, there must be some sort of deep work that needs to be done, on your own. Because I can tell you from experience, that's the only way I improved with this strategy. Like, Marco Abbott can tell you, I really didn't ask him too many questions. Like, when I first joined, I asked him, like, hey, like, a couple of the same frequently asked questions that you may have asked. But that was literally the first day I joined, because I couldn't get a grip on it. But after that, I was watching content every single day. Literally, it became a habit for me. I still watch content every day. And this is what you guys need to start doing, because, it's the little things. It's the little things. If you're trying to make a strategy, if you're trying to master a strategy at that, and trying to refine it, make it feel like it's second nature, you need to be watching content every day. It's a non-negotiable. So to be able to then dissect price action like how I am now, using the terminology, going through, everything, like it's just, I'm unconscious to it at this point, because I've done it so much. And that comes with the work, the work that you have to do behind closed doors. You can show up for the live call, we can help you frame out what we're looking at, but what are you doing whenever there's no live call? Like, what are you doing whenever we're not answering your questions? Because, we probably aren't always going to be here. We have lives too. We're going to be busy too. So you guys need to focus on trying to be more self-reliant in the case of figuring things out on your own. Like, ask yourself these questions. Like, talk to yourself whenever you're in session. Like, why is price doing this? Why did it just have this sell-off? Look to the left. Price is telling you why it's doing what it's doing. And there's some times whenever, you can't get a good read on price. And this is one thing I learned from Marco. Like, if you can't get a good read on it, there's no need to force it, Like, that's one thing I admire about him, because he's able to be humble enough to say, okay, I don't know. I actually don't know, so I'm not going to touch it. That's one thing I've really had to work on, because I've been very impatient in times where I just wanted to see the market go up or go down. I've had a bias, I wanted to make money, because whatever I was going through. And I'm like, you know what, bills still got to get paid, so I want to trade. So a lot of these things play a factor in your execution, and you just have to be mindful of that. So to really combat that, you need to be self-aware, and you need to identify, what are these things that are holding you back? What are these things that are inducing, bad habits into your trading? Because these bad habits will then multiply, I promise you. If you're still trying to punt and full port these challenges or whatever the case may be, it's gonna show whenever you start to get funded. Trust me, it's gonna show. If you're in a stage where you're still, break even, and you just don't know how to get out the break even stage, there's work. It's gonna show in your journaling. Like, if you need to be journaling, for one, like that's a non-negotiable at that. So whenever you're journaling, it's just not of a thing of taking a screenshot and pasting it into your journal. That's just nothing. That's not going to help you at all. You need to be very detailed in your journal. You need to, like I said, what really helped me is comparing my before to after. It's going to help you train your eyes on what you need to see. If you're doing this every day, constant repetition, the brain loves repetition. That's how you learn. So if you're constantly doing that, there's no way you won't improve. But if you're just going to sit here and wait for us to, answer every single question that you have, as far as, oh, is this the right way to go about it? Oh, is this entry valid? Is this the right liquidity point to target? Things like that. I just want you guys to, do the work yourselves, as far as looking at, what ways you can improve on. If you can't really see, or you don't really spot liquidity that well, okay, now this is where you be self-aware. If I'm a person that I don't know how to really build a bias, or I can't really frame out direction, then you need to be focused on building your direction. Watch content that's based on building your direction. You guys need to start doing things intentionally. Like, also, what are you using your time doing while you're watching the content? Like, are you multitasking while you're watching the content? Because if you have your phone propped up watching content, listening to other shit in the background, trust me, you're not helping yourself. You're not learning. You're just overstimulating yourself and getting a dopamine rush. So I highly recommend, I strongly recommend, whenever you're watching content, you need to be focused. You need to be locked in. Eliminate the distractions. Set out a time, like a routine, where you're going to watch content in a specific environment, to where you're not going to be distracted. You're not going to be bothered. You can write notes down. You're totally engaged. You're immersed into the content. It's not just you're laying in bed. You have the content prompt up. You're half asleep. Like, that's just not going to help you. It's just not going to help you. Like, also, we do these webinars, so then in the future, it answers questions that you may have had, or it answers probably one of the new members' questions that they may have, one of the new members in the future. So I guarantee you, because a lot of you have a lot of frequently asked questions that we've been getting for years now. And a lot of that is answered in the webinars. That's why I keep telling you guys, like, the sauce is in the webinars, bro. Because a lot of people have asked the same questions you have asked. You're not the only one. You're not alone. Trust me. So you guys have everything you need to succeed. I promise you. I promise you. It's there. But, sometimes we take things for granted. Or maybe you guys are just not taking advantage of your time. Because at the end of the day, it's your career. We can't help. We can only do so much for you guys. We can't execute for you, though. We can't. So if you're really trying to be serious and make this a career and actually, be profitable, just think about why you're doing this. Like, you really need to lock in and say, okay, what is my why? Like, don't let social media lie to you and tell you this is what a profitable trader looks like. This is what the day in the life of a trader needs to be, looks like. Because you guys let other people define success for you. That's why you're not going as hard as you could. Because when you define success for yourself and you define your why for yourself, you're gonna go as hard as you possibly can. Trust me. So it's very imperative, very, very imperative that you go back to the drawing board and remember why you're doing this in the first place. Because that is what's gonna make the hard work feel easy to you. You know, it's not gonna feel like work. There needs to be a point like when you're watching content, you know, you're back testing or you're journaling, and it's just another day in the office. You know, you're not dreading it. You know, there's some times where, you know, maybe I've taken, you know, a fuck ton of trades in a week and I have to journal it all. You know, sometimes that could be overwhelming. That's why you make sure you have to journal every single day, because you don't want you won't even be able to journal correctly if you're waiting till the end of the week to do so. It needs to be an everyday process. So the homework I have for you guys is it's three things actually. You guys need to figure out why you're doing this in the first place. Only you can answer that. There's no going on YouTube figuring out how to find my why. No. You need to sit down in silence and reflect on yourself. Why are you trading in the first place? What is your goals? Like, do you want financial freedom? Do you want you know to change your family's legacy? Like, these things are real things. Like, why are you doing this in the first place? Because your why is your foundation, and that's the starting point you want to start from, because then you'll be able to take action. Okay, number 2, you guys need to start watching content. And when I mean watching content, I mean identifying where your weaknesses are as far as the system. So if you have trouble identifying entries, I highly recommend you focus on liquidity tracking and entries as well. But none of this matters if you cannot build a bias. So if you know that you also have trouble building a bias, you need to start from square one. First, the most important thing is building the bias and having the direction. When direction is not clear, there's no need to take an entry, you know? Because if I'm able to frame out, you know, a direction in less than 2 minutes and I'm trading toward that direction the whole time. Yes, there's counter bias moves. You see how we keep inducing sellers, but I'm not taking those counter bias moves just because a high or low is taken. I know what I know what I want to frame out. So that's number 2. Figure out where you're weak at and work on it every day. Every day. You guys have no excuses. If you're in this, you have to be doing the work. It doesn't matter like if it's 30 minutes. Come on. I know a bunch of you have 30 minutes of your time that you can use on watching content, because it's so easy to scroll in 30 minutes, I promise you. Then number 3, figure out what you're wasting your time on. This is very key. Like, this is more than just trading right now. Number 3 is actually like a life skill that's helped me immensely improve this year. So around Q2, the beginning of Q2, I started managing my time, because I've been somebody who had terrible time management. Terrible. So I've been able to literally restructure my whole life just by auditing my time. What am I wasting my time on? There's a lot of times where I had, you know, unaccounted for time where I'm just doing nothing. So whenever you find out, you know, what you're wasting your time on, you can fill in the gaps, right? So I was able to see, you know, okay, if my priority is improving on trading, I don't need to spend 2 hours at the gym. You know, it sounds crazy because, you know, health is important. Health and fitness is important to me, yes. But trading is my main priority. So if you know what your priority is, you know how to allocate your time better. So if your priority is to trading, I'm not saying don't go to the gym. I'm saying trading needs to come first. If you need to journal, journal before trading. I do my weekly review before I go to the gym. Why? Because this is more important to me. That's just that. You guys need to know like what's important to you and what's not, so you can allocate your time better. If you know you're doing things that you shouldn't be doing, it's time to lock in and stop it, because we're getting too close to the end of the year to still carry on bad habits that we want to kick. But that's the three things I want you guys to really focus on. I'm not gonna really go over any other pairs. I just wanted to go over gold, just so you guys could not have too much information overload on whatever the week had. I don't really care for NQ right now. There was a move, but fuck it, I don't care. But that's enough of my talking. Let me answer some of these questions. I'm sorry, guys. I got so locked in. Hi, bro. We had a reaction just above your reaction that you have as well. Took a short on Friday. I was was taken. The short. I mean, yeah, this is LB above. So if you took an aggressive entry, fair play. Definitely valid, yeah. After we respected this, we're engineering liquidity to the lows after we take out the liquidity target. So once this is taken, we have all the liquidity to the downside now. So yeah, the short is valid. Short is valid. Would I take it? It depends. I'm not gonna lie to you and say I wouldn't take it, because there's times where I have taken these type of aggressive entries. So it just depends how I'm looking on the week, because I like to the direct entries that we like to call it, or aggressive, what I usually call it for me. Either I reduce risk, or I have to have a buffer on my account to be able to take higher risk trades. If I'm like in drawdown, I'm not trying to really take high risk trades. I'm trying to take the bread and butter, these confirmation entries. That's what I try to focus on. It's really hard to not overthink. Yeah. Okay, so yes and no. It depends at what frequency you're vibrating at. So I don't want to get too deep into it, but if you have a mindset where you're thinking of the worst case scenario, or you're thinking if, could have, you're anxious now because you're thinking in the future. The future is not even here yet. If you're focused on the present moment, there is no overthinking, because you're locked in on the moment and what you can control right now. Because you just can't control the outcome in anything at that. So if you're so focused on controlling any potential outcome, yes, you're gonna overthink. Trust me, you are, and that's everything in life, not just trading. So overthinking really just stems from thinking too much in the future. Shit that you can't control. You just have to have a stoic mindset of the only moment is now, which is the present moment. That's the only moment that exists, because right now you're creating your future in the present moment. So therefore, why should we focus on the past or the future when they don't exist? I did too. Totally right. Appreciate that. Big up. Thank you, man. Well said. Appreciate you, bro. On a 4 hour above your first inducement low, or you mean high? We had a reaction to the upside. To me, it looked like sellers were induced there as well. Hold on. Fuck. I wish you guys could annotate, because now I have to look for it. On 4 hour above 4 hour. Damn, I really should clean this up, because this looks crazy. Let's just go to the MGC, because I don't want to lose that. 4 hour above your first inducement high. Okay, so this one. It looked like sellers were induced there as well. Yeah, they were, because we took out this internal. You know, we took out that internal and then we traded higher. But then we were initially reacting off of this low from the left. And what do you have below? LB. Overall, liquidity is above 4193. 4193. Where the fuck is 4193? Above 4193. Are you talking about this low? I mean, yeah, probably liquidity can be taken now because we've taken out sellers, we've trapped sellers, and there's an LB above, so could potentially see downside, yeah. But guys, time is the most important thing. That right there is your biggest asset, or it's your biggest liability. Time. Manage your time. Focus on what you're spending your time on. I have enjoyed this webinar. I can't lie to you. I love to ramble. So I hope you guys took some value from it. And that'll be the end of this week's webinar. And I'll shoot you guys messages in the end of day chats this week. I wasn't as active. I've just been very busy because my family's in town, so I'm spending time with them. So I'm just trying to make sure, I maximize that while I have it. I appreciate you guys for coming out today. Yeah, Mo, I went over that in the beginning of the webinar. Just watch the recording whenever you can. Yeah, it's going to be recorded, but you have to be a part of the course to access the recordings. So just to let you guys know, the live call members, if you want to watch the recording is for course members, and it'll be in the WAP, just letting you know. But you guys have access to watch the webinars. So, what a good one, guys. Trust me, we'll have another one next week. Lock and loaded. Remember, focus on what